What's going on, guys? It's Jimmy here, and I keep you up to date with everything going on here in our country on a daily basis. And I just did a video on why your tax returns might be higher than expected. But now I'm going to do a video on why your tax returns might be lower than expected. And that's right, and you might be a little bit confused here. And this is very, very true because while the tax code has changed for better for some people, and for worse for some people. Yeah, and this is unfortunately true. And I'll link you to the other video on why you could receive more money in your tax returns. And you should watch that video next after this. And right now, I'm going to tell you why you actually might receive less money. Yeah, and these are things you need to know about even if you don't file a tax return, because these are things, well, especially the other video, because some people might want to file a tax return even if they don't, because they actually could be missing out on money for not filing. Yeah, and especially if they have other people in their family, sons or daughters or people like that. A lot of this stuff is very helpful information that they might not know about. A lot of this stuff is like stuff when it comes to voting time. This might be, differences in reasons on why they might want to vote one way or another or something like that. Because a lot of this has to do with Congress and what they have and have not passed. Yeah. And especially right now, they're talking about cuts to Medicare, Social Security, Medicaid, and cuts to the budget, cuts to the military, and cuts overall. And the question is, what are they going to cut? This is pretty significant. So take a look at this because the IRS is warning people that they're going to be getting less money in their tax returns now, which is not a good thing for anybody because inflation is really high and people are already struggling. Take a look. Why the IRS says to expect a smaller tax refund this year. Check this out. Yeah, the IRS is warning taxpayers at the opening of 2023 tax filing season that they should expect smaller refunds due to pandemic relief measures that have already been allowed to expire. And there's multiple of them. A big reason is that there was no stimulus payments from the government to help them, at least not on the federal level. There was multiple state stimulus payments. Hopefully you got some of them. The last stimulus payments on the federal level that went out were in 2021, at least for some people. We did just see here that actually just a few weeks ago, you can see here the IRS says it sent out 12 million refund checks, averaging $1,232 a pop. And some were higher, some were lower. These were actually directly from the IRS, and this actually pertained to stimulus money from or stimulus refund checks, amended IRS tax returns here. If you didn't see that video, I will link you to that video here at the end of this video because 12 million people got checks here just recently. Some of them actually might still be going out here. I'll link you to the video here at the end of this. Yeah, but millions more people received help through the pandemic through the expanded child tax credit. You know those. That many progressives saw as an effective and important social safety net. That credit was allowed to expire by Congress at the end of 2021. Yeah, so remember those monthly child tax credit checks? And a lot of people weren't sure, should I take the monthly check? Should I not take the monthly check? Should I just get them all in a one lump sum? Well, either way, whether you took the monthly checks or didn't take the monthly checks, either way, they were a big increase because if you had children under the age of 6, as long as you weren't over the income limits, which was a lot of money, you were going to get $3,600 per child. And if you had children ages 6 through 17, you were going to get $3,000 per child. So if you had several children, it was a lot of money. Well, remember that the Democrats, as long as I remember correctly, I think I am, the Democrats passed that all the way on their own. That was in the third stimulus check package. The first package, the first check passed, the only check passed by Biden and the Democrats on their own. And it included the child tax credits in there. There was like $50 billion in rent assistance, mortgage assistance, and utility assistance in there, and the child tax credit extension. No Republicans voted for that. And then the problem is they only passed that for 1 year. Okay, Joe Manchin voted for that, and so did Kirsten Sinema. But then when it came around for the next time around, remember that Joe Manchin and Kirsten Sinema were like, well, we're not so sure that we want to vote for it again because now we're worried about the fiscal budget and the deficit and stuff like that. So they only passed it for 1 year. So the problem is now it is not extended. So if you have any children, whether you got the monthly payments or not, and by the way, whether you took the monthly payments or not, you needed to file a tax return to get the rest of the money. Okay, because if you took the monthly payments, you only got half of the money because the monthly payments were only for 6 months. The rest of the money came in your tax return, which was $1,500 to $1,800. Okay, you need to file a tax return to get that. Okay, now since they have not extended that, basically it was normally $2,000 and they extended it or they raised it up to $3,000 to $3,600. Now that since they haven't increased that, it's going to go back down to $2,000. Okay, and there's stipulations with that as well. That's right. So as you can see here, the child tax credit in 2023 will only be $2,000 per child instead of $3,000 or $3,600, and only $1,540 of it is refundable, which means that if you don't owe the IRS money, you can only get $1,540 back to you. So, yeah. So, if you owe the IRS money, you can get $2,000. But if you don't owe the IRS money, they will only cut you a check for $1,540. Yeah. And by the way, that's per child. So if you have more than one child, that extrapolates. So you'll get even less of a refund multiple times. So you can see how that will definitely cut into your refund a lot. I mean, we're talking about 3,000 to 3,600 per child. Now you're only getting 1,500 per child as a refund. That's like half or less. Yeah. Thank your congressman. Also, a tax break for charitable deductions was also allowed to expire, which could affect more taxpayers. And other lapsed credits included an expansion of the earned income tax credit, also known as the adult tax credit for low income adults, which had its maximum amount nearly tripled in 2021 for adults and was made to apply to both senior citizens and younger workers. Yeah, that's right. So now that's this issue here as well. Taxpayers claiming the EITC, the adult tax credit, with no children who received roughly $1,500 in 2021 will now only get $500. So that's $1,000 less for the adult tax credit. That credit provided a wage subsidy to lower income earners that phased in with earned income. So when they got $1 of income, that was matched with an extra tax credit. Yeah. The child and dependent care tax credit will also dip back down this year to a maximum of $2,100 instead of $8,000 that could be claimed last year. So that's a different of a tax credit of what is it, $6,900 less of a tax credit. That's a lot of money you're missing out on yet once again, if this applies to you. For higher income earners who own mutual funds or other common type of investment vehicles, ups and downs in the stock market may also have resulted in higher tax liabilities for 2022. Declines in the S&P 500 and the Dow Jones index may many portfolio managers forced to sell off stocks, incurring capital gains taxes at the time of sales, or lost money over the course of 2022. If a stock was down $50 from its high, but up $100 from when somebody bought it, a mutual fund would have to pay capital gains, and they'd have to pass that on to you as a shareholder. Yeah, so as you can see here, there's several different things that have expired tax-wise, and yeah, it's not really good. And don't forget here that also because of inflation, Social Security has got the large, well, previously for the past year, Social Security got, which was the highest Social Security raise in 40 years, the 5.9% went all the way back to 1981. That raised a lot of people into the taxable bracket for Social Security, which is growing up higher and higher. Remember that Social Security can be taxed. I've covered this here in previous videos. If you make enough income, you can get pushed up into the taxable brackets for Social Security. Also, remember that 11 states tax Social Security income on the state level as well. And then now, with the 8.7% Social Security raise for this year kicking in, it's now pushing up even more people into the taxable brackets for Social Security. Remember that back in, I think it was 1983, and then in the early 90s, I want to say 93, but I'm not sure if I remember that date correctly. I don't have the information right in front of me. I tend to remember a lot of things, but not everything correctly. But in 1983 and then in the early 90s, Congress made Social Security taxable once and then changed it again twice, where Social Security up to 50% and then 85% of Social Security earnings could become taxable. And the problem is they never adjusted this for inflation. So back in the 80s and the 90s, these wages were kind of up there where it was only kind of like people that kind of made a lot of money or a decent amount of money back then. But the problem is that was 40 years ago, 40 some years ago, 30 some years ago, 40 some years ago. Okay, now 40 some years later, with inflation of just even regular inflation from 40 some years, and now a couple years of high inflation, um, it's really not that much. Remember, the average person working nowadays makes 50 some $1,000 here in 2023, 2022. Okay. So inflation goes up every single year, and this is pushing people's income higher and higher. Even on Social Security, you just got an 8.7% raise. Okay, so the problem is those taxable brackets for Social Security did not go up. So every year, there's more and more people creeping up higher to the limit for Social Security taxable brackets. So this is kind of a problem here. So let me know your thoughts here in the comments, and I'll link you to those videos here next that you can watch here, which are really good information here as well. Actually, reasons why you could get more money back on your tax refunds. And even if you're a non-filer, you want to watch this video here as well. I got two really good videos here for you next. So if you haven't yet, make sure to click the subscribe button down below to our YouTube channel. It's completely free to do so. Remember, new videos come out here every day at 10 a.m., 3 p.m., and 8 p.m. Eastern Standard Time. And don't forget to hit the bell icon after you subscribe so you don't miss out on new videos. And if you find these videos helpful, don't forget to hit the like button for us here as well. You can also share these videos with anybody that needs to hear this information. Here's some videos you can watch next. Here is some reasons why your tax refund this year might be larger than expected with some new changes that just happened. And here is that video about the IRS sending out 12 million checks for an average of $1,232. Maybe you're getting one of those. So click on one of those videos next. Thanks for watching, guys, and I'll see you in the next video.